A giant $4.5 trillion asset manager just entered the race for a spot Ethereum ETF. Sam Altman was just kicked out of OpenAI. How will this affect WorldCoin, a coin he created? And ordinals are taking over the crypto space. Let's get into it. This video is not financial advice. Read disclaimers on the screen. So Fidelity, an asset manager with $4.5 trillion US, making it one of the largest asset managers on earth, has officially filed for a spot Ethereum ETF. You can see the 19B-4 form right here. With more and more financial giants entering the race, how long can Gary Gensler and the SEC keep delaying and denying these spot crypto ETFs? Sam Altman was just kicked out of OpenAI. So OpenAI released this, a leadership transition letter. The Chief Technology Officer, Mira Murati, appointed the interim CEO to lead OpenAI as Sam Altman departed the company. Mr. Altman's departure follows a deliberative review process by the board, which concluded that he was not consistently candid in his communications with the board, hindering its ability to exercise its responsibilities. The board no longer has confidence in his abilities to continue leading OpenAI. Now, this is pretty weird. Sam Altman obviously grew OpenAI from the start, from when it was basically nothing to a company now worth about 80 billion US dollars. Now, if you guys weren't aware, Sam Altman is also behind the WorldCoin coin, and right now it's down just about 12.5%. But what do you think it will mean for this project? Is it going to be incredibly bad for WorldCoin now that their CEO doesn't have an in with OpenAI? This chart in front of you shows the total volume being traded for Bitcoin ordinals. Once again, if you guys aren't aware, Bitcoin ordinals are just NFTs on the Bitcoin blockchain. And you can see over the past month or so, this thing has absolutely exploded. Now, I kind of remember NFTs doing something similar in 2020. They had a little test pump during the middle of the bear market, right before the bull market came. And when retail finally arrived in the middle of the bull market, NFTs went absolutely crazy. So are we going to see the same thing for ordinals? Is this going to be the next big thing of the next bull market? You guys let me know in the comments down below. Now, just a reminder though, Bitcoin ordinals, like with everything in crypto, is incredibly risky. So don't buy something just because I mentioned it in this video. This isn't financial advice. Today was a deadline for 2 Bitcoin spot ETFs. However, instead of accepting them, the SEC has basically just delayed them. Delayed as expected, not really a surprise. The SEC also delayed their decision on the Hashdex Nasdaq Ethereum ETF, which would hold both spot and Bitcoin positions in Ethereum. Now, they told us they'd make a proper decision on this ETF by January the 1st of 2024. Let's hope they don't keep delaying. Polygon, one of the leading layer ones, has just absolutely exploded in terms of usage. So let's dive into what exactly is happening with their chain. So this is all apparently due to minting of ordinals like tokens, which caused a big surge in Polygon's transaction fees. So this is insane. This right here is the daily transactions chart for Polygon, and you can see it has just gone absolutely vertical. And all of this is due to a new token called PRC20, which is an ordinals inspired token standard on Polygon. I believe it just came out, and yeah, once again, it seems like ordinals have started to move from Bitcoin to other chains like Polygon. Could this be the start of the full-on crypto takeover of ordinals? And is there potentially a buy-in opportunity for major profit if we can get some ordinals on a new layer one that hasn't had ordinals explode on it yet? Let me know what you think about that in the comments down below. Some FUD going around for the second largest exchange, Bybit, and I am covering this because I do tend to talk about Bybit quite a lot. Now, if you look in the description down below, right below the Bybit link, I do have a little disclaimer, and in the disclaimer basically goes into the fact that although I do like Bybit and it seems like a safe exchange, you don't truly know, especially after the FTX situation. You cannot literally trust any of these crypto exchanges. So yeah, let's go over this FUD because it's important to know, especially if you have money on Bybit. The FTX estate lawsuit they recently sued Bybit alleges that about 10% of Bybit's stablecoin cold wallet is owned by Alameda accounts and frozen for basically no reason. Meanwhile, Bybit insiders face a 9-figure clawback as when the entire FTX situation went down, they used their VIP access to withdraw. And I guess for some reason this isn't allowed because there shouldn't have been any preferential withdrawals. But on top of that, they also rugged Alameda's own money on the Bybit platform. They also rugged the FTX estate's bit allocation too. FTX was supposed to receive some bit tokens, the token for Bybit, but yeah, they never received them. So yeah, not a good sign from an exchange, the fact that they owe this much money to FTX, and they're doing a bunch of kind of shady things with FTX as well. Obviously it doesn't mean, Bybit's going to collapse tomorrow, but yeah, just something to think about in the back of your mind, never trust any of these exchanges. Although we are forced to use them, there's nothing we can do about that. If we want to trade somewhere, we have to use exchanges with amazing features, and those happen to be, Bybit, BitGet, Binance, etc. We do kind of have to use them, but don't trust them 100%. Like and subscribe, and you get to learn everything happening in crypto daily in a short, sweet video. I'll see you tomorrow. This video is not financial advice. Read disclaimers on the screen.